Hey everybody, thank you for tuning in. You've reached the Real Estate Fix. I'm your host, Rich Szerman on KHTS 98.1 FM, AM 1220, your hometown station. Thank you guys for tuning in this morning. It's a Friday morning, so I'm the guy in the chair. We're going to talk about all things real estate today, and we got a special thrill today. Well, special thrill for me anyway. I have Danielle Pearson and Eric Moore from Stewart Title coming in to talk to us today. We're going to talk about all things title. Title insurance is one of those things in real estate that anytime you buy or sell anything, you got to pay for, and nobody ever seems to know exactly what it does. They have this kind of vague idea. And so it was the people at Stewart Title were good enough to come on in today, and we're going to talk about it. You guys are going to like it. It should be really interesting. Oh, maybe I'm just the only one who finds this stuff interesting, but I think you guys will find this interesting because title is really, really important. And the work that title does, well, there'd be no real estate industry without them. Let me put it to you that way. And it's very, very important. And they're going to come in. We're going to talk all about it. I got some good questions for them. It'll be fun. But in the meantime, let's talk about where the market's at. As always, what's going on in the market? You know, the question I get most often from folks, when you guys email me, and I appreciate when you do, it's richsherman@gmail.com. It's a funny name of Sherman. It's R-I-C-H. My first name, S-Z as in zebra, E-R-M-A-N. S-Z-E-R-M-A-N is how you spell my last name. Even though it's pronounced Sherman, there's just a Z where the H belongs. So I'm not Russian ancestry, they tell me. But anyway, richsherman.com. You can go there and either the website or just send me emails, and I will be more than happy to answer your questions, as always. But the one I get more often than any other is where is the real estate going? When is a good time to sell? When is a good time to buy? Stuff like that. And I'm happy to answer those questions, but most of the time the answer is, what is your life dictating? But as far as what the market is doing at the moment, I can certainly fill you in, because with real estate, you're never going to time it quite perfectly. But I finally, for the first time in quite some time, have some very good news for buyers. So I'm going to go through all of this stuff. There are 4 stories I'm going to tell you guys about, 4 headlines just in the last couple of days. And we're going to go over, and you're going to kind of get the picture from that. So let's start there. So first thing to know, this is just from February 12th. Foreclosure filings jumped 32% year over year. Now, we talked about this a couple weeks ago. The number of foreclosures in the country at the moment is starting to skyrocket. They are going up by leaps and bounds. Now, part of that is just recovering from the pandemic still, but there are a lot of folks in foreclosure now that were not in foreclosure before. And as you guys know, I do foreclosure. I prevent foreclosures. I fight foreclosures for free. I help people get out of trouble for free. So if you are in foreclosure, have any problems, please give me a call at 661-714-1400. Any real estate questions, any problems at all, you can call me at that number 24 hours a day, 7 days a week. I will do my best to answer. If I don't answer, please text, and I will call you back as soon as I can to answer your questions. Anyway, foreclosure filings jumped 32% year over year. That is a big number. U.S. foreclosure activity rose for the 11th straight month year over year in January. Foreclosure pressure was most acute in Delaware, Nevada, Florida, and California. Texas and California led the nation in foreclosure starts. Even with completed foreclosure sales up 59% annually, economists say the current levels remain well below pre-pandemic norms and reflect a gradual market normalization rather than a housing downturn. Now, with all due respect to whoever the learned economists are who said this, I disagree, and I'm in the market on a daily basis, and I'm telling you in our area anyway, and certainly all of Southern California, if not the entire West Coast, and most of the South, prices are down. And this is a symbol of that, because if you had a house that you could sell for a decent chunk of money, you're probably not going to let it go to foreclosure. Now, that's not true of everybody, certainly. There are different other reasons. But if you got a bunch of equity in your house, you have the option to sell it and get that out of there before it goes to foreclosure. If you're upside down, then you don't. So foreclosure filings are going through the roof. Across the United States, 40,534 properties had foreclosure filings in January, which include a notice of default, a scheduled auction, or bank repossession. Every state does it slightly differently, so that's why those are different formats. In California, we do NODs, notices of default. Anyway, that's according to the analytics firm Atom, A-T-T-O-M, which, if you're into this stuff, is definitely a place you should go to. They have a great website. That's a 10% drop from December, but a 32% jump year over year, marking the 11th consecutive month with an annual increase. Every month for the last 11 months, the number of foreclosures in this country has gone up, and it's gone up in double digits, 20, 30%, 40% in November. Well, one of every 3,457 homes nationally saw a foreclosure filing in January, according to the same report. Florida led the nation in Florida starts for the month, this is January, with 3,523. That's 3,523 people in foreclosure in Florida right now. Texas followed with 3,116, then California with 2,790. And that's just foreclosure starts. That's not counting the ones that are actually going through. And here are the big numbers. Lenders started foreclosures on 26,369 homes in the United States last month, a 26% leap from January of 2025. And here's the terrifying number. So it's up 26% as far as new filings. But completed foreclosures, those are houses that have gone all the way through the foreclosure process. The foreclosure was not prevented, and the bank has taken back the house. Completed foreclosures were up 59% over the previous year, with 4,714 homes repossessed nationwide. That is 59%. That number should stagger you. The number of foreclosures is going through the ceiling. There are a lot of them out there. And again, if you're one of the people who's stuck in that problem, or you think you're going to get stuck in that problem, give me a call. I can help you out, and we do it for free. There are a lot of things you can do in California, even that you can't do in other states, to protect yourself from foreclosure. You got options, but you got to get in there. And the sooner you get in there, the more options you're going to have, and the easier it's going to be to sort out. So again, you can call me anytime, 661-714-1400. Okay, next headline. Mortgage rates hit their lowest average since September of 2022. This is an article from just yesterday. The 30-year fixed rate stood at 6.01% as of Thursday. Mortgage rates fell to the lowest average since September of 2022, with the 30-year fixed at 6.01% on average and the 15-year at 5.35%. The Mortgage Bankers Association measure of mortgage demand climbed by 2.8%. I would have thought that number would be higher than 2.8. I think everybody's waiting for the interest rate to get under 5 or under 6. I think the minute we start seeing headlines that the interest rate is under 6, you're going to see a lot more refinances, a lot more buyers, and things like that. Anyway, refinance applications increased 7% compared to a week earlier, but up 132% from a year ago. Now, that's probably because a year ago the interest rates were over 7%, or right at 7, so it hasn't been enough of a decrease to get people off the fence. But it will be. Lower rates have fueled sharp increases in refinancing, but home sales and pending contracts remain weak and amid affordability challenges and winter conditions. Economists, I don't want to say economists, I want to know who it is. Economists expect spring to bring more buyer activity with millions of households newly able to qualify for mortgages at today's rates. All right, let's talk about the differences here because they're important. 5 years ago, if you bought a house for $400,000, now in our neighborhood you have to double that because it's $800,000. But if you were able to buy a house for $400,000 5 years ago, your interest rate would have been 2.81%. Your mortgage payment would have been, and this isn't counting taxes and interest, taxes and insurance. This is just payment interest. Your monthly payment would have been $1,646. But here's the big number. Interest over the term, how much would you have paid to borrow that $400,000 over 30 years? $192,000 is what you would have paid for that. Now, a year ago, that same $400,000 at 6.85%, the payment is $1,000 more, $2,621 a month. See why there's a big difference? $1,000 more than it was 5 years ago because of much higher interest rate. But again, the big number, the interest over term. You're going to pay for that same loan at 6.85 versus 2.81. You're going to pay $543,000 versus $192,000 in just interest over the loan. That's huge, more than double. That's crazy. Now, today's interest rate at 6.1, that same payment is $2,400 a month, about $220 lower than it was a year ago. And the total into the house, $464,000. So not nearly as good as the $192 you could have gotten away with. This is the total cost that you're paying in interest 5 years ago at 2.81, but still a whole lot better by about $80,000 over the course of the loan that you would have had to pay now than a year ago. So we're moving in the right direction. We're just not getting there soon enough. Okay, buyers seize the upper hand as home sales crash to 30-year low. Now, a recession is defined by 2 quarters of negative growth. I'm here to tell you the real estate market in the United States has had 3 years of consecutive negative growth. Real estate in this country is in a recession. The average consumer doesn't necessarily notice it because the prices are good. Even though they're starting to fall a little bit, they fell about 4 or 5% last year. They're going to fall about 4 or 5% again this year. It's just where we're at. This is the number of sales that are going on. The volume of sales, which really what moves the industry, is at a 30-year low. New data from redfin.com shows that 62% of buyers purchased homes below the original list price last year. That is a record number of discounts. According to realtor.com, there are now 600,000 more sellers than buyers in the market on average, creating the largest gap on record and giving home buyers significant negotiating power. And according to CNBC, over 40,000 purchase agreements were canceled in December of 2025. That is the highest rate of cancellation since 2017. So I'm going to put this all together for you. But remember, highest rate of cancellations. The market is shifting. Buyers have more control now than they've had in the last 2 decades. Now's not a bad time to be a buyer. You're not quite there yet, but not too bad time to be a buyer. And last of our 4 articles, which are going to paint this picture, short sales are back. A short sale is when a homeowner sells their property for less than the remaining mortgage balance, which is short of the outstanding loan amount with a lender's approval. In other words, if you can't afford your house, you look like you're going to go to foreclosure, or even if you're not, you just can't, the mortgage payment doesn't make any sense to you. You could go to the bank and say, I realize my house was worth $900,000, but my debt on this house is $1,000,001. So how about I sell the house for $900,000? You're going to make less than that in foreclosure anyway, bank. So how about we sell it for that? You go your way, I go mine. And banks agree to that, not because it's good for the consumer. Banks agree to that because it's good for the bank. The process with a short sale is typically initiated to avoid foreclosure, allowing the homeowner to maintain some control over the sale and potentially reduce credit damage. Unlike foreclosure, which is involuntary and initiated by a lender, a short sale is a voluntary negotiated exit strategy. A short sale usually indicates the homeowner in financial distress, a real estate market in doldrums, or both. Both for most people these days. Short sale must be approved in advance by the mortgage lender. The mortgage holder may be required to pay the shortfall. Not in California. We're not a deficiency state. You don't get stuck with paying short sales for deficiency judgments in California. We just don't have them on real estate by and large. They can happen, but they're very rare. The financial consequence of a short sale will be less severe than a foreclosure for both the seller and the lender. For a home buyer, a short sale can be a good opportunity if approached cautiously. The best deals in the market tend to be short sales. The downside for a buyer is they take longer. So again, foreclosure filings are up higher than they've been in the last forever. Mortgage rates are at their lowest rate since September of 2022, so not as good as we need, but headed in the right direction. Buyers have more control over the market now than they've had in the last 20 years. Buyers are more important now than they were in the last 20 years. It's been kind of crazy how much more the market has shifted toward buyers. And short sales are now back on the market. So that means people are selling because they don't have equity in their house. So what do these four things tell you? What they tell you is now is a good time to be a buyer. We're not at the best time to be a buyer because I think interest rates are going to go down a bit. And I think property values are going to go down a bit. But get ready. If I were a buyer, and I'm telling this to all my clients, so all those of you who are listening, please, we've had this conversation before, get yourself ready. Get your pre-qualification done. Decide who you're going to use for your loan. Let's start talking about other affiliate services. Let's get our ducks in a row. Let's be ready. And let's start looking at houses. No hurry. But let's start looking at houses, because when the right one shows up, because it's either the special, most greatest one ever and it fits your needs perfectly, or because prices are continuing to come down, I'd much rather be a buyer than a seller in the current market. You have more power as a buyer now than you have had in a long, long time. There's no reason to rush, because the more time that goes on, the lower the prices are going to get. They're not going to drop by 40, 50, 60% or anything crazy like that, like we had in 2018, 19, and 20. None of that kind of stuff, or 2008, 9, and 10 before that. But it's going to come down. We lost 3 to 5%, depending on where you are in the Santa Cruz Valley last year. We're going to lose the same 3 to 5% this year, something like that. It doesn't sound like a lot until you realize, in $1 million house, which is rapidly becoming the average in our area, 5% is 50 grand. So these numbers get substantial pretty quick. So just stuff to pay attention to. I mean, that's just kind of the nature of the beast. So good time to be a buyer. So if you're a buyer, I was just talking to engineer Ricardo here, since he is anxious to buy a home in the not too distant future, because I'm sure you're tired of living with your parents, as a lot of people are. It's not, we're not quite there yet, man. I tell you this, whenever I see you, I tell you this all the time. We're not quite there yet, but start getting ready, because sometime, probably middle of this year, maybe second or third quarter, I think it's going to be the time to jump if you're a buyer looking to do stuff like that. And if you're an investor, let's look at rental property or whatever you want to do with it as an investment. Keep your powder dry a little longer, because the time is coming. And we're not going to see drastic reductions. It's not the free fall of 2008 or anything crazy like that. But good times are coming. I would say when that interest rate gets under 5%, gets under 6%, excuse me, wishful thinking that it gets under 5. But you see that interest rate dip under 6% and stay there for a week, that's going to be the time to buy. That's going to be it. So we'll see what prices do. Anyway, that's where the market's at. If you have any questions, you can always call me. Again, my phone number is 661-714-1400. Let me say that again slower. 661-714-1400. That is my personal cell phone. I give it out on the air all the time. You can reach me at that number 7 days a week, 24 hours a day. If I don't answer, please send me a text, and I promise I will call you back. Except unless you're my mother, and I'll call you back when I get a chance, Mom, because you always call during the show. Don't know why, you just do. So one time over the week you want to talk to me. Anyway. So let's go to break. Let's hear from some of the advertisers. When we come back, my special guests, Danielle Pearson and Eric Moore of Stewart Title. We're going to talk about all things title. Now, stay tuned. I know that sounds like I'm talking about car insurance or something. And title is insurance. But this is going to be worth listening to, because you're going to want to know what this means, especially if you're looking at buying and selling. And even if not, you should know. It's not that complicated to understand the basics here. And I think by the time we get out of this, you're going to understand a lot more than you do now. And you'll understand why title is as important as it is, because it is a big, big deal. So please listen to the break, will you? I'm your host, Rich Szerman, on KHTS KHTS 98.1 FM, AM 1220, your hometown station. Hey everybody, you've been listening to The Real Estate Fix. I'm your host, Rich Szerman, on KHTS FM 98.1. FM, AM 1220, your hometown station. I want to thank you guys for tuning in. Thanks for listening to the break. I appreciate it. I have special guests in studio today with me. This is going to be a lot of fun. I have from Stewart Title, I have Danielle Pearson, and I have Eric Moore. I'll read their bios for you guys. Danielle has been in the real estate industry for nearly 10 years. She's dedicated to helping agents succeed. She grew up in the Santa Clara Valley, and she's a proud single mom of a gorgeous little 5-year-old girl. I've only seen pictures, but I'm sure she's as cute in person. I'm sure.
Thank you.
And Eric, Eric Moore, Senior Title Operations Manager, also with Stewart Title. Eric has been in the title industry for 24 years. He is currently the Senior Title Operations Manager for Los Angeles and Ventura counties. Pretty good-sized job. Eric is a Candy Country resident and father of 4. I have 1 and it kicked my ass. I don't know how you do 4.
You have to ask my wife.
Yeah, that's
just... I love that.
What are the ages?
I have 10, 9, 7, and 4.
Oh my God!
Yeah.
And you found time to come in and do that, or is this just easier than your regular job?
Yeah, it's easier than my wife's job being with them.
Well, yeah, that's for sure. Yeah, that's fair. Yeah, we had 1. She's 19 now, and I always tell her I was a very good dad up until 7. But after 7, it was just whack-a-mole. And I have a great kid. She wasn't doing any of the stuff I was doing. We were talking about earlier.
Right,
She's a good kid. She got good grades. She kept, much more like her mother, thank God. But that was when she was born. I kept writing. I said, "Please be more like your mother, less like me, more like your mother, less like me."
Don't scare me with the teenage years.
Yeah, no.
Even as a teenage girl, she was fantastic. She really was. I mean, I had friends of hers who do stuff, and she'd go, "God, I can't believe her friends do that." I said, "Yeah, that's right.
Yeah.
Don't do that."
Lead by example.
But see, she also had the ultimate comeback. Anytime I disciplined her for anything, there was always, "Well, Dad, I was thinking about this. How many times were you arrested by the time you were my age?" And how many times have I been arrested? Yes, Catherine, I understand. I get it. Yeah, that's fine. How about we talk about how many times your mom was arrested? Your mother, she's the one with the law degree in the MBA. Let's aim for her rather than me.
Deflect, right?
Aim higher.
Leave it on the mom.
Yeah, aim higher. Jane is smarter and better looking than I am. Go with that. Anyway, so I got a bunch of questions for you guys.
Awesome.
Some of these I got from some of these we came up with in the office. Some of these came from clients of mine. A couple of these came from a client I happened to have in the office the day that you guys said you would do it, because she said, "What is title?" I said, "Well, you've been paying for it,
right.
And every time you buy or sell a house, it's super important. If you didn't, trust me, if you didn't have it, you'd know. Mm-hmm. So it's kind of a big deal. So I'm going to kind of go through these questions, and we talked about it a little bit. Awesome. But feel free to expand if you want to take it someplace else. That's fine too. Okay. So my first question: when buying or selling a home or other real estate, what does title do? Why do buyers and sellers pay title fees? What is the role of title in a real estate transaction? I'm sure you guys can do a better job explaining that than I can. So whichever wants to start, go for it.
Awesome. Do you want to get into it? I could get into it.
Yeah, I'll start. I think you had a couple questions baked in there. I'll start with the first one of what is title insurance and what does it do?
Yes.
So it protects the insured, which is typically either a buyer of a real estate real property or a lender, a mortgager. And what it does is it protects them of liens and defects that might affect title to the property that are unwanted. That's it in a nutshell.
Okay, and that's important because if you're a lender, for example, you're not going to loan somebody money unless there's a clean title report, because you need to make sure that the person you're loaning the money to does in fact own the property.
That and the respective lien position that they wish to be in.
Of course. And if you own a property and you don't have title insurance, you got a whole other problem, because you're not going to be able to do a whole lot with that property. You're not going to be able to get loans on the property. You're not going to have you got a lot of problems to go with, because you're no longer standard. Because title is the entity that says this is the standard. Title is the entity that says, yes, you really own your house. It's a combination of the government saying, the assessor's office saying you're on title. But as far as affecting that, because without title insurance, you cannot do anything with the title, other than maybe, I guess, if you could probably transfer it, but it'd be, you could have a cloud doing that, I would think. But it's very, very important. It's a type of insurance that ensures that you own the house.
Right, essentially, and we want to protect the buyer because we don't want anything to come up later. So if a buyer wants to sell the house down the line or anything in that aspect, that is why we want to stress that title insurance is so important for our buyers. So there's a clean slate. It's like going to a doctor's office for a checkup.
I like to think of it as a protective and preventative insurance, as opposed to a lot of types of insurance that are more reactive and are there for instances where there's accidents or unexpected events. We try to make sure title is clean and provide a product that assures you of a clean title, and make sure we clean everything up and prevent problems before they ever happen.
Absolutely.
Well, I think you've hit the nail on the head. Because title is a type of insurance that's proactive rather than reactive, that's why people don't seem to really know what it is. Mm-hmm. Because it's one of those things that, I hope you guys would agree with me when I say this, it's one of those things where if you need it, oh my God, do you need it?
Oh yeah, absolutely.
And if you don't need it, then great, you never needed it. Fine, wonderful. Let's go about your day. That's great.
Yeah, you don't want to have to need it.
Yeah, exactly.
You need title insurance.
Well, those of you who are listening, like my
Selling.
wife, who's a real estate attorney, you have talked to title companies a lot in your career, because if there's any, like she's got one right now where it's a house built in the 40s or 30s, I think, in downtown LA.
Okay.
And the driveway is where the driveway is, and a neighbor decided to put up a fence. And that's fine, but the driveways are so narrow that when you put up that fence, they couldn't open their door, couldn't get to the garage. So they now have to take that down. They have no choice. And the title company, it was funny because all the title companies agreed very quickly this is how it has to be handled. But the neighbors themselves couldn't come to any sort of a settlement, so that took a little bit longer, as often happens in those cases. But it was very helpful because the one side had a title company they were talking to, the other side had a title company they were talking to, and the one thing they were all in agreement is, this is where the driveway is.
Right.
There is an easement here that because over time you have to, so you got no choice, take down your wall. Took a little time to get it sorted out after that, but without title, that case would still be going on for the next decade.
Right.
Yeah, it's a great example.
So yeah, it's absolutely ridiculous. So what is the role of title in a title insurance in a real estate transaction? You make sure it's ready to go.
Right.
The decks are cleared. Everything's where it needs to be. We're talking to the proper people. Everything's right. Okay, let's move on to the next one. What is a title search, and why is that necessary?
So the search is the very early stages of the transaction where they're going to look back in public records and compile everything that currently affects the property that will be shown on a title prelim. A preliminary title report will be the product that is issued that discloses all the current matters affecting title, including the ownership.
Right.
So any kind of loans or any kind of liens or judgments,
Encumbrances.
Any problems that are on that prelim. That's why the prelim report is so important to review. Wouldn't you agree, Eric? I mean, that is
absolutely.
that's everything that you want to look for before you sell the house, essentially.
Yeah.
Right?
Well, I've been giving this. Tell me if you think this is good advice. What I tell people typically is that you should check your credit once a year, and you should check your title once a year. I can't get people to check their credit once a year, and that's a lot more reactive than title is. But you should do both of those things, because if you've experienced any sort of title fraud or any other problems, you
Right.
want to know immediately.
Absolutely.
You don't want to find out when you're going to sell the house that some guy you've never met is now suddenly the owner of the house.
Right.
So prelims are extremely important. My advice is just pull it once a year. I know it's great advice because it
That
costs
is
title
great
companies
advice.
money, so I don't know if it's great advice for
Yeah,
you
well-
guys, but it's really good for the consumer. Okay, let's move on to the next one. This is a good question. I like this one. What is a, quote, defect in title, and what are the most common title defects you see?
Ooh.
That could go on for a while about that, I suspect. But
Yeah, there's a couple of examples. Go ahead, Eric.
well, Eric, you're a senior. Go ahead.
Yeah, he is.
It's a broad term, but typically when we think about a defect in title, we're talking about either a lien or encumbrance that is unwanted, or a vesting issue, right? If people take it upon themselves to record deeds with the county recorder, and the errors can be very broad. You can have an error in the legal description, which defines the wrong property or not the property accurately. It could be a portion of interest that you don't own, or that perhaps you're conveying out of yourself individually, yet you owned it in the trust. Things like that might create a cloud or a defect on title. Unwanted liens, unknown liens, right? Some people do have liens recorded against their property that they were unaware of.
Yeah.
General index liens, right? A lot of people don't realize you might have a state, federal tax lien against yourself personally, and they don't realize that attaches to real
the house,
property
yeah.
that they own in that county.
Yeah, well, same thing's also true with judgments. If you get a judgment
just
against you,
gonna say that.
and you own real property,
Yep.
Support liens,
It's
yeah.
gonna attach, yeah.
Absolutely.
Oh, yeah.
Yeah, so there's all kinds of. So you just need to check it because you need to see what's there. It's not that big a deal. It's not it's not like reading. You don't have to read. It's not like reading Sanskrit. It's pretty straightforward, and you'll see the liens that's there, and you'll see what the taxes are and everything else. It's just a good idea. When we do have a problem with some sort of title defect, the title company is really the first line of defense.
It is.
So somebody comes in with defects. So how do you? So I'll just put it a more general question. If somebody has a title defect, and you guys get the call, usually I would imagine usually from the consumer, from an attorney, the next step is
Curative work, right?
Yeah,
So
exactly.
if it's a lien or encumbrance and we're involved in a transaction, it might be paying that with the proceeds of a sale, for example, or a loan transaction, right? So if it's a monetary lien and it's accepted that it belongs to them and affects title, we might pay that through the close, pay it in advance of close. If it's something like a cloud on title, a vesting defect, we might have to look to cure that in advance of a closing, right? Oh, I didn't realize that my cousin John had an interest in here of record. Let's account for that. Let's get him off. And we'll do curative work in advance. So it's really dependent on the situation, but it can be cured in advance of a transaction or through the transaction.
hopefully in advance makes life easier. for
Right, we
everybody,
want
but
advance
yeah.
because we want a smooth transaction.
Yeah, again,
We
why
want
you should
any
check
surprises
your
at the end.
title.
Absolutely.
So if there's, let me give you this as an example. If we have a situation, 'cause we're seeing more and more of these, I'm sure you guys are seeing more than I am, where we're seeing title fraud, where somebody who you've never met, do not know, suddenly has a lien against your house for 30, 40, 50,000 bucks, and they've managed to get it recorded with the county, even though it has nothing whatsoever to do with you. So in a situation like that, how do we kind of respond to that?
That's a good question.
If
I mean, it depends on the specific situation.
Right.
I'm leaving out a lot of specifics that are necessary for I realize that, but
yeah, I mean,
sort of
in the scenario that you had given, where it's an unwarranted lien or a fraudulent lien, you have to take legal action. You really do.
Yeah.
A title company, we generally won't play judge and jury.
You can't.
Yeah, and so I mean, to your point, that can happen, and when it does, it's another defect on title that has to be cured. You certainly don't want to pass that along to a buyer, and a lender doesn't want to go behind this lien that doesn't belong in its position, because they want to be insured in their respective position. So that would look like taking legal action and getting a court order to void that instrument of record. Yeah.
Usually quiet title action or something like that, I'd imagine.
Yes.
But again, why you need to check, because this can happen. Now, granted, it's not as commonplace in Los Angeles as it is in other places, but Los Angeles is a great big city, and great big county, I should say, a lot of people in it, and there are bad actors out there. There just are. I can tell you.
I do think it happens more than people understand.
For sure. For sure. Well, there was a famous one that we were involved with. I don't know if you guys remember. It's the Parsa Law Group. It had this little symbol with three guys. Anyway, there were three partners in Parsa, and they were just fraudulent from the word go. I won't bore you with the whole story. But one of the guys was on the run. One of them was in prison, and one of them was still going to trial a couple of years ago. And I'm pretty sure he got jail time as well, because what they were doing is they were saying, to avoid a foreclosure, we're going to take this fake lien out of $20,000, $30,000, $40,000, $50,000. How that's supposed to stop a foreclosure, I have no idea, because that's ridiculous. Wow. So all they wound up with is liens against these properties, and their hope was that if the house went to foreclosure, they would then get paid on that back end as a junior lien holder. That was the scam. And a couple of banks had paid out like that because they didn't know any better. And then when you saw several, a couple of these in a row, it finally got to the state attorney general's, attention, and then they got flagged, and then an investigation came after that. But this was an organized group. They said they were a law firm. They were all over the radio and television advertising like crazy, which is one tip. And they were supposed to be helping people with foreclosures, and really what they were doing was charging them, then defrauding them. Wow. And the house would then go to foreclosure.
Still go to foreclosure.
And and then they would try to get paid on the back end as a fake loan. And if you just lost the house in foreclosure, you're not going to get in there and fight over a fake loan. You already lost the house. So that was their scam. That was just one. I mean,
we saw a lot of schemes come out of the 2008 housing crisis. A lot of bad actors took advantage of people in distressed situations, and the cleanup work on title is messy, right? I mean, a lot of people they clouded title intentionally to delay foreclosures, and then there's a great effort in trying to clear that. And unfortunately, when people that did hang on to their homes went to do a transaction later, once the equity was built back up, they really had a tough time liquidating that property or getting a loan on it.
Well, this is a good segue.
And then they made a movie on it.
Yeah, several.
With good
several.
actors.
Yeah, several.
Right.
The Big Short and some of the others. Yeah, a good book too. So I promised my wife I would do this. One of the things she sees a lot in her practice, I promised I would talk about, because people don't seem to get this, is there's a very popular scam that's going around. It's been going around for years, where the theory goes like this: you are in foreclosure, but you don't want to file bankruptcy. So the law firm, which then only disreputable law firms would do this. No actual reputable attorney would ever do anything like this. I also think you'd probably get punished by the bar if they caught you doing this. I hope so. Anyway, so the scam goes like this. You're in foreclosure. You get a letter in the mail from a law firm, and you call up the law firm to help prevent the foreclosure because they say these great things. And what they do is they take somebody who is already in bankruptcy, who you do not know and have never met. They give them a small percent. Yeah, you're shaking your yard. So you've seen this a million times. You put them on title, which is a huge mistake. You put them on title, and now their bankruptcy protects you from foreclosure, which is a great theory. And let's say it works really well, and it protects you from foreclosure, and let's say in the time allotted during the bankruptcy, you somehow get the foreclosure stopped. Great. Now what? You now have this stranger on title, which is relatively easy to get on your title, but now you've got to get them off. You don't know them. You've never seen them. You don't have an address for them. Now what?
Yeah.
Because we're now back to the position where you can't refinance your house, you can't sell that. Someone you do not know now has an ownership interest in your property.
Right.
Now what?
And is that person real in those circumstances?
Yeah,
That was my
I don't
next
know.
question.
I don't even know.
Maybe
I know they had a real
not.
bankruptcy because there's a bankruptcy case, but I don't know if they were defrauding the bankruptcy court as well. I have no idea. But the point here is, and we see this so often, not as often as you guys do, I'm sure, but we see this so often. I put somebody else on title for some other reason that I should not have taken place with to begin with.
Right.
I didn't run title. I didn't get title insurance when I put them on. I didn't run an escrow. I just signed it with the county as a quitclaim or something, one piece of paper, and now I can't figure out why I don't have control of my house anymore. Because those things to unwind are brutal.
Right.
I mean, just so you guys know, if you're listening out there, to unwind something like that, Typically, and correct me if I'm wrong here, you guys know better than I do. Typically, you're going to have to run a quiet title action, which is a lawsuit. So you're going to have to hire an attorney. That's going to cost you about $5,000 to $10,000 in a retainer. Then you're looking at the next 3 to 5 years of your life while you explain, because it's not, no court's going to see this as a priority. Nobody's in imminent danger or anything. You've got to fix your title problem. Before you see the inside of a courtroom, you're probably $30,000 to $40,000 out.
Yeah.
Now, if you'd had a title policy, you can go to the title company, and title companies have lots of attorneys, and they will help you sort some of this. They won't do everything, but they will help you sort some of this stuff out. Again, why it's important to have title. Even if you're doing stuff yourself, still go get a title policy, for goodness sake. Right. It's not that expensive, and it will save you so much time and money in the long run. Right. And again, because it's proactive, it's one of those things that, if you don't break your leg, you don't need to go to the doctor. But it's nice to know there's a doctor in your town, and it's nice to know that they can cast your leg if you do break it. So it's that kind of thing. And because it's proactive rather than reactive, people don't often understand, and this is why I wanted to get you guys on so much, they don't understand the importance of this unless it's too late. Like the guy who did the title transfer, the people who do the title transfer themselves to the bankruptcy thing, that scam, it only protects you for a short period of time. And it will work because it will, in my view, flaws in the bankruptcy code. But then what? If there's no mechanism for removing that person, even if it works, which I don't think it does most of the time, but even if it works, now you've got this new problem.
Yeah, then what is the complicated
so you've
part.
now traded one problem for another. You try to, granted you saved your house, but now you got to go sort this out. And if you can't find the person to sue them to get them off title to begin with, now you got to do it by publication, and that takes even longer. Right. And these things take forever. So just, if you can hear me saying this, please listen. Unless you talk to a qualified title person or an attorney or even a realtor, for goodness sake, don't go changing the title on your house without good reason. I mean, if you're doing it for estate planning or something, there's some very good things to do there. There are trusts you can put in other people's names. All kinds of good reasons you might want to change title other than a sale. But do it thoughtfully and do it with professionals. Right. Don't do it on your own. And don't just... One more person tells me they got the title advice from ChatGPT. I'm going to scream. ChatGPT is not a title rep. ChatGPT is not a title officer. ChatGPT knows nothing about title except what it accumulates from other people who are also wrong. Right. The way to sort that out is to talk to one of you guys. That's the way to sort that out.
Absolutely.
So this is my plea to anyone who can hear me. I don't know if it'll do any good, but this is my plea. Don't go changing your title around without not just a good reason, but a lawful reason. And always have an exit plan. It's great that you're going to do X, Y, and Z for whatever reason. Now, what's the exit plan? If you need one, how do you get that together? Think it through. Because God, we're probably averaging one a month now, because the numbers of foreclosures have picked up. So we're probably averaging one a month where they come in and it's like, well, I can do this, that with the foreclosure, but now I need the other guy's permission on the authorization too, and you don't know where he is or who he is. Right. So. Yeah, I don't know how they were supposed to do that. So don't go changing your title around. It's just dumb. It's just a goofy thing to do. Usually with good reason, but talk to people who know more than you do. Talk to people who know more than I do. Talk to
professionals.
Yes. Okay, next one. What is a I think we talked about it. What is a defect in title, and what are the most common defects you see? That was, I guess, the one we just did, didn't we?
Yeah.
Why is it important for buyer and seller, to be able to deliver clear marketable title? That's what I get for using a legal term. Clear marketable title to the buyer at the close of escrow. Why is that important?
I mean, we already hit on some examples of why that's important. But I would say that something to think about is you want these transactions to be final. Mm-hmm. You don't want them to come back, right? And so you do want title to do the curative work if it's necessary, and you want to go through title to find out if any curative work is needed. Both on the buyer and seller end, you really want to make sure, because again, sometimes sellers, while they may think, well, I haven't done anything with my house, I have a standard loan since I purchased it, and I haven't done a thing since, and they don't realize that may not be true. I like to use the Hero and Pace loans as an example. Oh. I don't know if you remember those. A lot of people, they were sold on the idea that you just pay it in your property taxes. While that part is true, they don't recognize that it also serves as a lien on the property, and when you go to close, you're not necessarily going to be able to pass that along to a prospective buyer. And so while you may think that your property is completely marketable, you may not learn about some of this stuff until you open a transaction, get a prelim report, and learn it at a later time when it's not the best time to learn.
Well, the problem with Pace and Hero is because they're wrapped in the taxes, so they actually supersede the liens, they supersede the loans, and that's the bigger problem. And most buyers are not, especially in the current environment, as we were talking about the first segment of the show, most buyers are not going to take on your Pace lien or your Hero lien if they don't have to.
And even if they will, the buyer's lender won't.
Oh, more importantly, that's very good point. Yeah, you can thought of that. Yeah, very good point. So you can get in trouble with that kind of stuff. And those are good programs, but you just got to be aware that it's there, and you got to deal with it. So. Okay, so so you got to be able to deliver clear title and make sure that you're buying what you think you're buying or selling what you think you're selling. You know what? Let's do one more and we'll go to break. Does title play? I guess we already touched about this a little bit. Does title play a role in property boundary lines? That was a question for me.
To a certain extent, yes. I mean, the legal description of your property will identify what those boundary lines are, while we don't ensure exact measurements per se.
Well, you're
in the
not
legal
surveyors,
description.
but yeah.
Right. And then when it comes to moving those, there are certain title processes, subdivision. We have subdivision operations within our operation of doing, if you're going to do a land split, if you're going to do major subdivision projects, condominiums, all that plays a role in title, and it's important as it relates to title, because you want to make sure you own the land that you expect to own.
Yeah, and more importantly, you can explain if you're doing subdivision or something. You have to explain that to the county and everybody else, and it has to be together,
Yes.
as it were. Otherwise, you can't just go over.
It all has to be legally compliant.
Meets and bounds, distance and distractions.
Everybody has this attitude
Everything.
that when, building houses and stuff, you just show up with a shovel and a hammer and get
No.
to work, and that is not at all the
Exactly.
case. There's years
not
worth of
that
work that goes into it. A lot of it with title before you ever get to that point. So, actually, I got a slew of other questions I want to get to, but let's hear from some of the advertisers and stuff, so we don't get in trouble with them. And guys, when you do listen to the show, if you do support the advertiser, you're supporting the show, and I do appreciate when you do that. So, please listen to the break, won't you? I'm your host, Rich Szerman. You're listening to the Real Estate Fix on KHTS AM 1220 FM 98.1, your hometown station. Thank you for listening. You're listening to the Real Estate Fix. I'm your host, Rich Szerman, on KHTS FM 98.1 AM 1220, your hometown station. And thank you guys for tuning in. Those of you guys listening to the show, I've got special guest in with me today from Stewart Title. I have Danielle Pearson and Eric Moore. Danielle is a title rep with Stewart, and Eric is the senior title operations manager with Stewart. So thank you guys again for coming in. And the last segment was fantastic. I really appreciate it. So let's get back into some of these questions. Our time is limited. I want to get some more of these answered for us here. Let's see. So we were talking about boundary lines. Let's move on. What is title? Well, what we talked about title fraud is, but what are some of the examples you've seen just from our area? Because I see a tiny bit of this by comparison. You guys must see a ton of this kind of stuff.
Yeah, in the current environment, there's two big ugly spaces right now, which are vacant land fraud and ID theft. Right, you see ID theft more in the loan realm, where they will hijack your identity and then take a loan out on your property, strip out the equity, take the cash and run. Where vacant land is more in the sales side of things, sometimes with loan transactions, but vacant land specifically is big, not just locally, but across the country. I think the FBI recently had a big article put out about it. It's going on everywhere, and we take very calculated measures when we at Stewart Title handle transactions involving vacant land to make sure that doesn't happen to the people involved. You don't want to be on either side of that. And that space is scary, and that happens when, again, identity is stolen. They act as if they own the property, or they are the individual that owns the property, and then they sell it to an unsuspecting buyer who thinks they're purchasing this land, turns out not to be the right owner. Sometimes these things don't unravel until
years later.
Years
this
later,
is the land I bought
yeah.
5 years ago. No, it isn't.
Yeah, right.
Have you seen any that were hysterically funny though?
Sure.
What do you got?
Oh no, I'm sorry. I thought you were asking if I wanted to hear anything.
No.
I'm like, you have stories?
Okay.
No.
I got stories right. Okay. Let me think we go to a title. Oh, this is a fantastic one.
Okay.
Oh yeah, a couple sitting in front of my office, and they're sitting in front of me, and we'd run. There was standard sales. I won't tell you. Well, it was in town here, and we run the prelim. We get it, and I look and I go, hey, this looks fine, but you got a child support lien on here. And she looks at me and goes, oh my God. You told me. I'm like, whoa, hey guys, I'm not getting involved in your marriage. What? That's too. Marriage counseling's 2 doors down. That's not my office. And she's furious, and he's like, I don't know what you're talking about. I don't know what the child support lien there. And I was, well, it's a child support lien, and it's the same. And everyone was starting to go nuts, and they finally, thank God, we figured out that it was actually a child support lien that dates back to because he's a junior, so it was his dad's child support lien when he was a kid. His dad didn't pay child support, and it was actually his dad's lien that because it happened, liens happen automatically. It had been transferred to their property.
Yeah.
So, and then of course they're trying to explain. They said, "You're always on his side. I'm not on anybody's side." Look right here. The lien. The lien started in 1985. You guys didn't meet that. He wasn't old enough to have a kid then.
You don't have to go to couples therapy.
He doesn't have an illegitimate. He does not have an illegitimate son with the same name. I promise.
So we'll use that example to give all of our agent listeners the opportunity to say, look, send us your client's statement of information
Oh, yeah.
early on, because
Oh, yeah.
the general index will report liens that attach to a person's name, and without having all their particular information that the statement of information calls for, we can't filter all those out. And so sometimes a report might show a lien that doesn't necessarily belong to that specific person with that name, but somebody else with the same or similar name.
Well, had we done a statement of information ahead of time, it would have avoided the potential
Right.
divorce that was taking place in my office that
To
day.
avoid the additional drama
Yeah,
that doesn't need to occur.
and he's like, well, and I didn't know anything about the relationship, but clearly there have been problems leading up to. So he's saying, no, I don't do that anymore. Like, anymore? Oh wait, no, I don't want to comment on any of this.
No.
I just want to get this sorted and get okay. Now, luckily, the date of the lien was original
Right.
date was on there, and he was only like 7 or 8 years old when that happened.
there
So
you
it's
go.
like. Because I don't think this couple survives. We'd had to send out a statement of information and get back the information. I don't think the 2 days or 3 days that would have taken, or even 1 day that would have taken, I don't think their marriage survives that.
Yeah.
But although it was fun because they sold them a house and they got divorced a couple years later to sell the house again. So that worked out for me. So for them, I think it was horrible. But as the realtor, it was such a bad gig. And I'm still in touch with both. They're very, very, they probably know who they are, but they're very, very nice people. They really are. Have you ever met people like this that separately they're perfectly lovely, fully functional human beings?
Yeah.
But when they get in the same room together, it's like,
Yeah.
what the hell?
Oh, the emotions.
Yeah, it's like Siamese fighting fish at a pet store. That's why they keep them separate.
That's relatable.
Oh God. Well, I just learned I can't have them in the same room
Right,
ever,
right.
ever. But, so yeah, I got funny stories really. But anyway, I've been doing this for 34 years, so you collect some stuff over that period, and you're in people's houses and stuff. It's a terribly fun but terribly strange industry to be in. Anyway, let's see. Let's move on to another one. So, how does title ensure the accuracy and completeness of title reports? We've already talked about that ad nauseum. Let's see. Why is it not usually advisable for homeowners to transfer his or her title to someone else without the title policy? Because
We don't want any issues to arise, and it's fraud, right?
yeah, you're opening yourself up to a. You tell me. if I'm
Yeah,
wrong,
I mean, it's very similar to what you would probably recommend to clients, not taking it upon themselves to sell without an agent,
Right.
right?
Yeah.
You filter it through the professionals who can understand all the nuance associated with these types of transactions. While you may think that everything is fine on your end and you can sell without having title insurance between you and the buyer, because really the product in a sale transaction, the product is for the buyer, but you as a seller don't want to learn of defects at a later time and get sued in the future as a result of having transferred title and not necessarily known about it. I mean, maybe
Right.
you completely legitimately didn't know about these matters that could have affected title, and now you didn't have that intermediary. It's a small price to pay for a product
Yeah,
that
it's,
assures.
what is
Could
that?
be avoided.
Yes,
What is that? A pinch of prevention worth a pound of cure? No, yeah, pinch of prevention worth a pound of cure, I think is what my grandmother was saying. Yeah, and it absolutely applies here. I've seen some wild and woolly ones. We had one that went all the way back to the original Spanish land grant. Some land, because in the early years of the land was useless. It was the top of the grapevine. It was so windy in this particular, and the variable part of it was sold off years ago. But they were trying to put up a cell tower there. And so the family came to me and said, we would like to sign this contract because it's not huge, but it's lucrative. And then as we were working it out, the engineers out there, no, it's too windy for a cell tower. We can't do it. So it all died anyway. But in researching the title for that one, which was super fun because we actually found the actual land grants, it was super, which, monks and priests did that, so it was a pretty-piece of thing. It was very nice. But there was so much garbage that it just sort of attached itself because nobody had done anything with it in 50, 60 years.
Yeah.
So it was just the wildest thing. It was fun, though. Okay, so let's see. We got... we did talk about if we put a homeowner on title, how do we get them off? This is okay. This is I'll just ask this one. We'll end on this. What would happen if there were no title insurance? Because that was one of my favorite questions to sort of ponder.
If it didn't exist at all.
If the system that we have, if the title insurance did not exist at all, it was just the wild, wild west, circa 1840 before we had title companies. What would it be?
I suppose you would either have to take it upon yourself, or the agents would have to go and search public record to verify the information attached to a particular property. They would have to become experts in that, and then if that went wrong, you would have to rely on the legal system, and take it. Take it to court if you have a problem.
My wife's a real estate attorney, so that'd be good for my family, but I think it'd be bad for everybody else.
Right, it'd just become more complicated, and lenders, it would be more of a financial risk for them as well, too.
Well, yeah, I don't know how
Like you said, it
That's
would
a great
ju-
point.
Yeah,
Yeah,
it would just
lenders
be
wouldn't be comfortable issuing.
Not at
these.
all.
Yeah, interest rates would be 10 times what they are now because
Right.
they'd have to offset their risk. It would be a
Absolutely.
disaster. In other words, title insurance is important. I'm just trying to drive this point
I never
home.
thought of that landscape, but now you've got me
Yeah.
painting this picture
Yeah,
of how
well-
important we might be, right?
I was up last night thinking about it. But but title that's why it's super super important. It seems like just because it's there and it seems like really, but it's super duper important. It's one of those things, if you didn't have it, it would be Armageddon. So just, don't mess around with this stuff. Deal with people who know more about it than you do. It's just a good idea. So I thank you guys for coming in. I really appreciate it.
Thank you for having us.
Thank you for having us.
It was very nice, very nice. I really appreciate it. Hopefully we'll be able to do it again. I really appreciate it. And yeah, next time around we'll be in the new studio, so that'll be fun. So thank you guys for tuning in today. I much appreciate it. I'm Rich Szerman. I'm your host. You've been listening to The Real Estate Fix on KHTS FM 98.1 AM 1220, your hometown station. Be good humans.